Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, and it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys are having a very nice weekend so far. Now keep in mind, all of the options plays in today's video are going to be for selling options, more specifically for selling put options as part of the wheel strategy that we like to run on the channel. Why do I enjoy selling puts so much, and why do I do it with 80% of my trading capital every single week? 3 very simple reasons, guys. Reason number 1, it's a very easy strategy to learn, manage, and then scale up or down depending on the size of your account. All you're doing essentially is super simple, is you are selling put options on your favorite companies. You're agreeing to buy a stock if it falls below the strike price by the Friday after the close. So make sure you do it on high quality stocks and stocks that you want at that price. If it goes lower, you end up buying the stock. If it doesn't, which is most of the times, you just end up pocketing the premium. It's a very easy strategy to learn, manage, and scale. Number 2 reason why I love this strategy so much, the time management, guys. It's very low effort, very low time management. If you have a full-time job, you like traveling, you manage a business, it only really needs about 15-20 minutes of your time per day. Reason number 3 I love this strategy is the consistency and the very high win rate. As long as you respect the strategy rules that I will outlay in today's video, 90 to 95% of all your trades should just end up the week with some very nice premium in your pocket. And as I said, in the event that the stock closes below the strike price, you get to buy some shares of your favorite companies, high quality companies at very attractive levels. So in today's video, guys, we're going to cover 3 very simple things. Number 1, we'll be going over the expectations for the week. We know that the past 2 weeks have been quite crazy, right? It's been a clash of sorts between the short-term bearish narratives and the long-term bullish tailwind. So as a result, we've had a lot of volatility in the past 2 weeks, and this week could be pretty crazy as well. So I'll take you guys through what we're looking for in terms of macro news releases, in terms of big earnings releases that could move the markets, and also just a quick rundown of where we stand in terms of technical analysis on the SPY and the Qs, so you guys can kind of plan your trades accordingly. Thereafter, in number 2 part of the video, I'll be going briefly over the strategy rules, spending about a minute just giving you guys the rules again, because when times are very volatile, you really got to respect the rules. So make sure you watch that part as well. And then number 3, of course, we're going to get into the top 5 options plays. And as per usual, I always have 10 bonus plays for you at the end of the video. So make sure you stick around to the end. So let's get right into it, shall we? In terms of the first part, the expectations for the week. Well, of course, we know that last week the markets were a little bit choppy because, well, after the government reopened, we kind of have a lack of data. The White House saying the October jobs and inflation data may never be released because of the shutdown. Now, of course, that led to the markets having a bit of a slide, and of course, led to the argument that the Fed, in terms of forward interest rate cuts, may be flying a little bit blind. And as a result, the probabilities for an interest rate cut last week dropped a lot. We are now under 50% for a possible rate cut in the month of December. I will remind you, just about a week ago at this point, it was 67%. And before Jerome Powell spoke about 2 weeks ago, it was in the 90s. So we've seen a clear deterioration in the probabilities for a Fed rate cut in the month of December. And as a result, the markets have not really been having a good time. However, this week, we're going to get something very big, guys. This September jobs report will be out on Thursday as the first data since the shutdown starts to trickle out. Now, the September jobs data, arguably at this point in time, is a little bit stale, but this is the first big release that we've had in over 2 months at this point. Other releases for this week include the ADP employment change on Tuesday, and then over the course of the day on Friday, we get the manufacturing and services PMI, more indications into the health of the economy. But Thursday and Friday will be the biggest days. Friday because of these economic releases, and of course, the Thursday session for the infamous jobs report. So it should be a very volatile week. Number 2 reason it could be a very volatile week is this one right here. NVIDIA earnings, Wednesday after the close. Now, we know that the AI trade has been under some significant pressure and has also been a factor in contributing to some of the declines that we've most recently had, right? In terms of the bearish catalyst, I'll remind you, the AI bubble, the concern surrounding market breadth, the concern surrounding how these tech companies, namely OpenAI, are going to pay for all of their obligations, has some people questioning the AI trade overall. And as a result, last week you saw big tumbles in everything that was associated with AI, especially some of the data center plays or some of the some of the names that perform the best, right? The EOSCs of the world, the Bloom Energies of the world, the NBISs, the Iris Energies, the CoreWeaves, down an absolute ton. Everything that was somewhat speculative and somewhat high growth oriented, came down in a very big fashion, right? So we will be once again revisiting the AI trade after those NVIDIA earnings. Special shout out as well to Walmart. Walmart is going to give us a big indication into the health of the consumer. I'll remind you, last February, when Walmart reported earnings and they started being a bit worried about consumer discretionary spending, it did lead to an initial sell-off, and it was kind of broad-based. So this week, we really got to pay attention, guys. Wednesday and Thursday. Number one for the AI trade with NVIDIA, and number two, Walmart for the status of the consumer, of course, which will, of course, tie into the jobs report that is released that very same morning. So when times are very volatile, we know that we possibly have a lot on the table this week. We want to be focusing on two key things. Number one, high quality, high conviction trades. And number two, not being greedy. Let the market come to you, right? Do not chase stocks to the upside this week, especially not with the wheel strategy. Wait for some of your favorite stocks to come into your desired levels. And as you'll see, most of the stocks on the top 5 options list, well, all of them are some of my favorite stocks in the market, and I'll be patiently waiting for them to come down into my desired levels so that I can write some put options on those stocks. In terms of the technicals, how we stand this week, guys, well, Friday we had a very nice bounce once again off the 50 EMA twice in the past 2 weeks, and before that we didn't really have anything. So the technicals have clearly been cooling off, but you can see it's been a very big battle between the bulls and the bears at the highs. In the event that this week does not go as planned and the market takes every economic release to the downside, and even maybe NVIDIA earnings, although they should be good, we know, guys, even though companies have good earnings, sometimes their stock price goes down and it could put pressure on the markets. So obviously, we would all want to see the recapture of the daily uptrend and just continuing on to the weekly uptrend higher. But in the event that does not happen, I will remind you, the next area that we can fall back down to, there is a decent amount of space here, 2.8% on the SPY and 3% on the Qs before we establish a new area of support, or rather before we fall into the next area of support. So there is some space. If we unwind a bit further, we definitely can plunge. And as a result, once again, you need to be very patient and wait for the market to come to you and just hone in on your favorite opportunities. When you know there's volatility, when you know the technicals are kind of teetering on the edge right here, do not go too fast. And dare I say, try and avoid some of the high beta, high flying stocks for now. I know the premiums on those options chains are very attractive, but a lot of them have very heavy momentum to the downside right now. And when you have such an unclear picture for the week, guys, it may not be the safest place to place all of your bets. That being said, that's your preview for the week. Hopefully you guys enjoyed that. Now, in terms of these strategy rules, so I'll be going through these very briefly. As a matter of fact, not at all. Take a screenshot if you want to. These are the strategy rules. I will leave a video down below in the description. It's going to be called Bull Market Wheel Rules Explained with a little YouTube icon, and that's going to link to another video. And specifically, there used to be a time on this channel where I used to run through these rules every single week for about 10 minutes. Now, we're going to be saving some time for the YouTube algorithm, of course, and just to save you guys some time overall. So as a result, I will link the 10-minute segment down below in the description. Pay attention, guys, to these rules. Every single one of these rules matters, especially high quality and high conviction companies, especially the monthly uptrend part or the longer term range, and no earnings this week. I see a lot of people taking unnecessary losses because they absolutely feel the need to play earnings. Don't do it, right? But definitely go have a quick refresher of these strategy rules when you have a big week like this ahead of us. So the link will be in the description. Pay attention, guys. It matters so much for consistency and to improve your win rates when you're selling puts in the market, especially at a time where the VIX right now is relatively high. We can find some nice opportunities, but it's not the time to be greedy. If anything, it's especially the time to be respecting every single one of these rules. So that being said, now that we're through the introduction of the video, let's get into the juicy stuff, the top 5 options plays of the week. So stock number 1 is going to be one of my favorite companies in the entire market right now. It's going to be Amazon for a few key reasons. Number 1, at $230 right now, the valuation of Amazon is very manageable, under a 30 forward price to earnings and a 1.46 peg. Very strong valuation, and they had amazing earnings. Additionally, you have a very nice area for a breakout retest. We're coming back into previously established resistance, which will now be support for the bulls. And as a result, I want to be writing under here. If I can pick up some Amazon or just sell some short puts down here in the mid 220s, I'll be very happy for two reasons. Number one, the valuation is very good. And number two, the technical area for a bit of a pullback is also very strong, with some bulls probably coming into play very shortly. Now, that being said, the expected move on Amazon for the week is 227.37. And as you guys know, per the strategy rules, you want to be writing below the expected move. If you don't know where to find the expected move, easy. Go to this website right here, barchart.com, type it into Google, bar chart, expected move, then whatever stock you want, and you'll be looking at the lower end of the expected move for the week on this chart, or down below here in the table, and you want to be writing below the lower price of the expected move to once again improve your odds of not being assigned. So, in terms of the established expected move here being 227.37, let's go have a look on the options chain. Where can we find some premium below 227.37, preferably as deep as possible because we know the week's going to be volatile. So if I'm looking for my target ROI, which I'll remind you as part of the strategy rules is 0.5% per week, I'll be looking in the low 220s here and see where can I get 0.5%. Very easy to calculate 0.5%, guys, in terms of your ROI. Divide the strike price by 2, and that's what you should find in cent increments to have 0.5%. I'll explain. 222 divided by 2 is 111, so you should be seeing 111 on the bid. That's how you know where the 0.5% rule is for the strike. Do not write options too close. You will end up with a lot of assignments, and also don't write them too far away. It just won't be worth your time and won't be worth your money. The sweet spot is 0.5%. It gives us some good distance, low chances of being assigned, but the ROI is still quite good. So as you can see for this week at least, we have the 222.5 strikes available, which is considerably below the expected move and very deep into almost the start of the second area of support. It would be a full retracement of earnings, which wouldn't look the best in terms of the breakout. It would just stall the attempt here at the monthly breakout pattern, give us a little bit of pause here, and maybe the bulls can try it again come later in the month of November or earlier into the month of December. As we kind of focus here on the fundamental price, lower 220s is solid. It's around the 12 EMA, on the monthly chart and the next area of support. So I really like that contract, guys. Amazon in the low 220s, not that bad at all. So I will be looking for some of these strikes. And as per usual, if Amazon drops Monday morning, who knows? Maybe you can get even better. Maybe you can get the 220s or the 217.5s. Just make sure you're getting 0.5% for your money to make sure you're getting your ROI minimums. That's it for stock number one. Stock number two, another fan favorite name out there, SoFi. The reason I like SoFi is two different reasons. Number one, the valuation. At about 27 bucks right now, you're at a one peg, which is very good in terms of the price per earnings growth. And also the price to sales right now is a 7.34. Both very manageable. Reason number two I like SoFi, it's a very volatile name, especially recently. And you got a nice technical level of entry here. 25 down to 22. It's prior resistance. It should be current support for the bulls. And SoFi has been having a lot of big red days. And when they give you the big red days, you can usually get some pretty fantastic entries into this overall support zone of 25 down to 22. The expected move for SoFi on the week is 25.95. So of course we want to be selling puts below the expected move. And as a result, let's go have a look at the options chain and see where can we find some short puts on SoFi below 25.90-ish? Well, if you have a look right here, if we're looking for 0.5%, right? Just do half of the low 20s divided by 2 in your head. You should be looking for about 12 cents. Where's the strike that pays about 12, 13 cents? 23.5. That is far below the expected move and also within the confines of our support range. So on SoFi this week, I will be looking for these following strikes. 24 down to 22. Obviously, if SoFi has another red day to start off the week on Monday or Tuesday, and you can find in the low 22s, that would be the best price. But I do not mind selling puts from 24 down to 22 since they are all in the respective range. So pay attention to that play as well. Play number 3 is going to be Airbnb, another very high quality stock that did report very strong earnings. We covered them on the channel on November 6th when they did report. The reason that I like Airbnb, once again, two different reasons. Number one, the valuation is very good. Low 20s forward price to earnings, a 1.54 peg, which is very manageable, and especially this extremely attractive 6.15% free cash flow yield with fantastic earnings and really good guidance. However, the stock has kind of just been stuck down here. Reason number 2 I like it is because it's been stuck down here. This whole 120 down to about 105 range has been support for the bulls for a better part of the last 2 to 3 years almost. And as a result, when I see the stock coming down into here with improvements in fundamentals and a low valuation, well, I kind of want to play, right? That being said, the expected move on Airbnb this week is 118.37. So let's go on the options chain once again and see where can we possibly find some entries for some Airbnb short puts. Taking a look down here, if you look for 0.5%, I'll remind you, half of the roughly 1 teens area should be about 55-60 cents. If we identify the strike price that is paying that, it's about between the 117, 118, which are both below the expected move. I would not mind either one of these strikes. They are into support and the valuation is very good as well. However, if Airbnb starts off the week red and you can end up getting even maybe a 116 strike, that's good, right? What you want to do is, depending on the price action, especially on a red day, guys, go as deep as possible into support while still getting your 0.5%. You will better your odds of not being assigned and also get the best possible price. That is stock number 4. Stock number 3. Stock number 4 is going to be Netflix. But no, we're not going to pay $1,000 per share. They have a stock split Monday morning. So Monday morning, you guys will get to see Netflix at $110 per share roughly. And as a result, we haven't been able to play the wheel on this one for quite some time just because of the cost that it was to play the wheel on this one. But now it'll be a lot more manageable at about $10,000, $11,000 per 100 shares. That being said, Netflix right now, 2 reasons that I like it. Number 1 is the valuation at about $1,100 right now. You're trading at a 1.7 forward peg, which is good, and a low 34 forward price to earnings, especially for this growth that they have ahead of them. Now, Netflix came down after the infamous Brazilian tax event, but their earnings otherwise were very good. We're currently off the all-time highs on Netflix by roughly 18%, so I do deem it to be a buying opportunity. You are coming into the monthly 12 EMA, and usually it's been a good buying opportunity when Netflix tests the monthly 12 EMA in the context of nice bull markets. Usually it gives you very good entry rates to be able to play this one. Now, I'll play this one in 2 parts. Because we know that even though we're hitting a monthly moving average, there's not much support here, is there, right? No, that area comes to the lower monthly areas down here at about 9 in the 900s, right? So I'll be doing this one in 2 parts. If my full-size trades on Netflix are usually 2 contracts, I'll be doing 1 here, and in the event they assign me, my DCA would be down here. I love this range, guys. 1,100 down to about $950 is the pocket that I want to play Netflix options more often. So let's have a look on the options chain, and I'll show you guys how we can kind of estimate what we can possibly get for these premiums, right? Essentially, you guys know that if it's going to be trading between, $110 roughly is going to be the newly established price on Netflix. You can already see them right here. The options chain is already adjusted, and as you can see, 107s are not too bad at all. They do pay about 0.5%. And for me, this week is going to be between 107 and 105. As low as I can possibly get for that premium, get right into this 12 monthly EMA, which is 107. So I will be a big fan of playing Netflix decently off the top right now, decent valuation, solid company, and as a result, I do want to start playing it a bit more aggressively here now that we have the opportunity to. That's company number 4, another very high quality company for me. And company number 5 is going to be Uber. The reason that I like Uber, 2 parts again. Number 1, the valuation, currently at $90 where they stand. They're trading at a forward price to earnings of 25, a forward peg ratio of 1.6, and a very attractive free cash flow yield of almost 4.5%. Very solid valuation for a company that posted extremely strong earnings in terms of monthly active users, bookings, total trips, and across their mobility and delivery segments. They were performing very well. Additionally, we're going to have a very nice pullback here. You'll notice that this is big prior resistance, and this is now going to be newfound support. We are currently trying to defend this 90 area, but that's not where I want to play. It's a bit too close for me. I'm looking for a possible breakdown into the high 80s so that I will have access to play the mid 80s. So this one is not ready yet. You will need a bit of a red day. There were some opportunities on Friday with the big volatility. If you follow through Monday or Tuesday this week, then you'll probably be able to find the strikes that I want, which are the mid 80s. I'll give you guys a quick little glimpse what I mean when I say that it's not quite ready yet. The expected move on Uber for the week is 88.78, but I want to be closer to like 86.85. And if I pull up the options chain, you will see that unfortunately at 86.85, there's not much premium there at all. As a matter of fact, the 0.5% rule is all the way up here at the expected move around 88. So Uber is one that you may have to be patient for, but I want to give it to you guys to just put it on the watch list. If you see 1 or 2 red days to start off the week, and you can find 40 some odd cents down here at the bid 85, 86, I will be looking for those contracts as well. High quality company looking for the infamous monthly pullback into huge support. And that is really where I want to start playing this company. But even though it's not ready, I figured I should give it to you guys just as an idea right away. The other companies on the top 5, they're ready right now. We saw it on the options chain. Uber is maybe 1 or 2 red days away, so keep that in mind. That is everything for your top 5 options plays. Hopefully you guys enjoyed. Now let's get into the 10 bonus plays. I will break down the bonus plays as follows: 4 growth names, 2 value names, a couple small account names as well, 2-3 small account names for those of you guys working with limited capital, and then 2 positions for very large accounts. Those of you that are working with a ton of capital that can play stocks in the $300, $400, $500 range, I'll give you guys my favorite plays that I'm going to play with my own big account this week as well. And I won't be giving you guys the expected moves. You guys are now experts at that. You can find them on your own, but I will be giving you guys the levels that I want and why. So let's jump into it with 4 growth stocks. So stock number 1 is going to be Affirm. The reason I like Affirm, 2 different parts additionally as well. Notice I'm always kind of joining the fundamentals and the technicals at the same time, guys. That's how you know you're getting A+ setups. Affirm, the reason I like it, very, very solid earnings, which we covered on November 6th on the channel. They're trading at a 1.48 peg and a 5 price to sales roughly. Additionally, you have a very nice monthly pullback into previous resistance, which will now be support. And as a result, this little pocket right down here, the lower 60s, is an area that I do continuously want to play. High quality stock, very attractive price. So I will be looking for Affirm in the lower 60s. It has good volatility, so you don't need to play this one too close. Stock number 2 is going to be Robinhood. So Robinhood's pulled back in a big fashion, weekly downturn right here, embarking into monthly consolidation. I want to be targeting the lower 100s, and Robinhood has such good volatility that you can actually find those strikes, especially when it has very big red days. If you take a look at Robinhood right here, you do not need to play this one too close. Even if you go down to the 105 range, which is where I want to be, you're getting 0.5% for the week for some incredible distance on this very high quality company. Would be a very nice full monthly retracement down into the 12, down into prior support, and they had phenomenal earnings, right? And that would be a very nice discount from the top down about 31%. So Robinhood, I'm going to start playing it more and more as we reapproach this $100 range. Stock number 3 is going to be Hims. Hims has fallen off an absolute cliff, guys. It's been nothing but red, red, red for this stock. Daily oversold conditions coming into our next area of support, which is 36 down to about $30. Hims is another one that has a very strong valuation right now in terms of a low peg, 1.56, and a super cheap 3 price to sales. Extremely cheap for this company. And once again on Hims, you do not need to play it too close. The stock's trading for about 35, 36 right now. And look how far I can get down on Hims right here. If I want to get 0.5%, right, I can play the low 30s on this stock, which would be like another 10, 15% off the current price, deep down there into support and at a very low valuation. So I will be playing Hims on a more recurring basis as we move forward, especially as we're into daily oversold conditions into our next area of support with good fundamentals. And stock number 4 is going to be NVIDIA. Now I know what you're saying. Don't they have earnings? Yes, but this is going to be an after earnings plays, guys. Don't play this one before earnings. If you do, it's on you. I'm not recommending it. But since I won't see you guys before the next top 5 options video next Sunday, well, in the event that NVIDIA drops after earnings for ever which reason, right? I will want to look for NVIDIA short puts down here, 170 to 165. It's the previous nice area of support. That'll be a very nice monthly back test down here of our 12 EMA and the bottom end of our support range down there. And would just look picture perfect in terms of a nice big monthly breakout, a nice retest. As I said, I'm pretty sure their earnings are going to be fantastic. Their guidance is probably going to be good, but you never know what the market's going to do, right? So many companies this quarter have posted really strong earnings, namely TSMC, and they just went down after earnings, right? So if NVIDIA is kind of the same thing, I will take advantage of those declines on Thursday morning after their earnings. And as a result, I will be playing the following week in terms of short puts. So contracts November 28th. Keep in mind, guys, I mean, I give weekly options, right? But if you wanted to do 2, 3, 4 week options, no problem at all. Just make sure you're getting 0.5% per week. Those are 4 growth names that I'll be looking at this week. Now, 2 value names. Number 1, CP. I give the value names because sometimes people have a lot of growth and they want to balance with value. CP, very attractive in my opinion. 70 down here at about 67. It's 4 years worth of support. This company's been doing nothing but posting very strong net margin rates and also has been expanding their fundamentals this entire time. EPS up and to the right for the next few years and revenue up and to the right as well. Company isn't having any problems. All the analyst price targets are above the current price. So I do want to be playing these support lows on CP. And value company number 2, yes, I put it in the value category because it's no longer a growth stock. It's going to be PayPal. The reason that I enjoy PayPal is because of the valuation. The valuation down here is super cheap. I did it after earnings at 74, and it was already cheap there. If you want us to redo it right now at 62, I mean, I'll just give you guys some numbers at 62 in terms of forward price to earnings, right? 62 divided by next year's forward EPS, you're trading once again at a 10.67 price to earnings for next year, end of 2026, right? In terms of the PEG ratio, you're going to be under 1. You're actually trading at a 0.91 PEG, which is super low on PayPal. Additionally, you have like 2-3 years of support on this stock. The company is buying back like 8 to 10% of its shares outstanding every year, which is just ridiculous. Tons of free cash flow, super strong free cash flow yield, right? It's just not a growth stock anymore. So I do want to play this one, not super heavy. We're not going to do a million contracts on this, but I can include it as part of a value rotation in my portfolio. That's it for two value names. Number 3, small account plays. I'm going to talk about Sentinel One. Sentinel One, the reason I like this one is because we did their valuation after their earnings August 28th, and they did have pretty good earnings. They do not have earnings until the month of December, so we don't have to worry about that. So the valuation of the stock is pretty fair. I mean, it was fair at 19, so at 16.79, it's even better, right? Under a 1.5 peg, price to sales should be closer to a 5. Very solid for this cybersecurity name, which is turning into a profitable company and expanding revenue and EPS in a very nice fashion. It's just the stock has not been able to kind of catch a bid. The analyst price targets are above, EPS flipping positive, revenue scaling very properly, and you also have 2.5 years worth of support down here overall. So I like this area, guys. This whole 17 down to 14 pocket, I enjoy playing it, and it should be on your radar if you do have a small account. Stock number 2 is going to be Oscar Health, another retail fan favorite name that's just been coming down and down and down as part of the health insurance trade overall. From the top that we were just about a month ago, we're down 42%. Down into where? Down into a very nice area of support. So I do not mind playing Oscar Health puts down here. For me, it would be like the 13s down to the 12s, bottom end of support overall. And stock number 3 that I could maybe bring to your guys' attention is DLO, a very fast payments provider company that is growing revenue and EPS at a very nice clip. They are a profitable company right now, about mid-teens in terms of their net margins, which is very good. They're growing EPS, very strong. They just had earnings. Earnings were very good and growing revenue at a very nice clip as well. So nothing is fundamentally wrong with this company, but it has been consolidating into our support range, call it 14 down to about 11.5, which is pretty much your prior support down there, and then became resistance for a while, and now acting as support once again. So this one too, I do not mind playing it at all down here in the 13 down to about $11 range. So keep those companies in mind if you're working with a smaller account. And lastly, 2 stocks for a big account. Number 1, Meta. Meta, very obvious play in my opinion. Daily oversold conditions right now. The last time we got daily oversold conditions was during the tariff sell-off or all the way back here in 2022. We're also approaching a very big area of support, 600 down to about 560. So don't play these too close. It's daily oversold. It's coming into a very nice pocket. Down there is the 26 EMA, which Meta very rarely tests in the context of a bull market. And the valuation down here in the low 600s is very attractive. So you can imagine if we're selling puts down here in the mid 500s, the valuation is under 20 in terms of forward price to earnings and under a 1.5 peg if you just redo the valuation with a mid 5s in terms of a price, right? So Meta, definitely one of my favorite stocks to be targeting for a big account. And last but not least, Visa. Visa, I love this company as well. It is very rare for us to find Visa under a 30 forward price to earnings. Now that's at 350. Now that they're roughly 7% lower, it's even better. You're coming into a forward 25 price to earnings. That's cheap for Visa, right? And a 3.5% free cash flow yield right now. Their earnings were really good. However, the market is just not giving them any love. The Visa stock has not moved here in the last 6-7 months. So I do enjoy selling put options down here in the lower 320s. High quality company, and every time it comes into this 12 EMA, Usually, it's been a very attractive buying proposition, at least when you go back over the past 15 years of data, whenever we are selling options or just accumulating some shares in or around the 12 EMA, it has been a pretty good time. And that is everything for all of your bonus plays, and that also wraps up today's video. If you guys enjoyed the video, consider liking the video. I would appreciate it for the growth of the channel. Consider subscribing if you're new as well. We'd love to have you back. We do these every Sunday in preparation for the upcoming week. And if you have any questions on the strategy, or if you have any suggestions of plays that you are currently playing, which you want to share in the comment section, definitely leave everything below. I love reading what you guys have to say to me. And last but not least, if you guys are tired of trading the markets all by yourself and you wanted to do so as part of a trading and investing community, you might consider joining our community. The link to join us is down below in the video description. You can join us and over 300 other members, which are trading and investing in the markets every day. In the community, you get a few different things. We specialize in the wheel strategy, but we don't only do the wheel strategy. You get access to all of my trades in real time, whether they are the wheel trades, the call debit spreads, the credit spreads, the long-term shares, the investment trades that I do for my long-term portfolio, the leap call options, and everything in between. Anything that I ever do in my portfolios, I give it to you in real time. Here's just a lot of the trades that we've made over the course of the past few months. The green little check marks are wins, the little targets are assignments, and the red little circles are losses. Obviously, the goal is to keep the wins much bigger and much more frequent than the losses, and we've always been doing that on the channel for the past 2 years that I've been bringing you guys this content. So here's just a couple months worth of our trades. Moving on further, you get access to our private morning live streams. Every Monday to Friday, I am with you guys for 2-3 hours at the open. I trade the markets live, and I also take all your questions on your stocks, your options, or your long-term portfolios. So it's a great place to ask me all those questions, and I can answer you and help you out with the charts, the fundamentals, or anything that you possibly want. You can also ask me your questions in our chat rooms all throughout the day, and I'm very fast to answer. You also get access to our educational section, that's where I have all of my strategies. So how do I do my leaps? How do I do credit spreads? How do I do debit spreads? More wheel strategies as well, over and above the one that I'm showing you right now, especially for big accounts. How do I do technical analysis, fundamental analysis? All of my educational content is in the Discord, about 15 hours worth of educational content. So that all comes to you as well. And as an extra bonus, you also get access to all of my charts and all of my watch lists. So whenever you guys see support and resistance levels that I put on the charts, such as on Amazon, and fundamental breakdowns, you guys just get access to all of it. It's like 15-20 seconds. You just copy paste all of my watch lists and all of my charts, and they just become yours. Just an added benefit when you are a Discord member. If any of that interests you, the link to join us, as I said, is down below in the video description. Hopefully I get to see a few more of you guys in there soon with us. And if not, I will see you right back here on the channel. That's all I had for you. Have a very enjoyable rest of your afternoon on Sunday here. And last but not least, guys, make sure you are just a little bit careful in the markets this week. Don't be too greedy. Wait for the markets to come to you and keep crushing your trades. Take care. See you during the week. That's it for me. Peace.